As we get older, we start to realize that it's probably smart to start building credit. When you want to go get a car, you're going to need your credit to get the lowest interest and the lowest down payment. As you get older, you have to get a house. Once you get a house, you're going to have to run your credit. That determines your interest rates and how much interest you'll be paying over that 30-year loan. So we start to understand that credit is very, very important in our lives, and we need to make sure we have our credit in place. So I'm glad you're watching this video. So I have 5 steps on how you can grow your credit score from scratch. And then at the end of the video, I have a special surprise for you. So make sure you watch it all the way through. So first off, what is credit? Credit is the ability to borrow something with the promise that you'll pay it back. And it usually comes with interest. Now, all interest is the extra money that you're paying on top of the money that you borrow. So if I go to the bank and I ask for $100, they may say they want 10% interest. So that means in addition to the $100 I have to pay back, I'm also going to have to pay $10, which is 10% of $100. So that's all credit is when you go to borrow something and you have a promise to pay it back, and likely it's going to have interest tied to it, especially if you go get it from a bank, or if you just get it from a friend, sometimes you'll have smaller interest. But either way, you'll have to pay a little bit more money than just the money that you borrow. The way the banks or the lenders view you as how trustworthy you are is by your credit score. Now, your credit score is compiled of a couple different things. Number one, being the most important, is your payment history. Your payment history is exactly what it sounds like. It's how often you pay on time for these loans or these credit cards that you have. Your payment history weighs about 35% of your total credit score. It's the biggest weighing category. So it is very important and it weighs the most. So you want to make sure you're always making on-time payments 100% of the time. Because if you make 100 payments and you miss one, now you're at a 99% payment history. So you want to make sure you keep that at 100 at all times, because the higher the number, the less risky you are when you go to try to get credit from other places. The next factor that compiles your credit score is the amount owed, or this is sometimes called utilization rate. Now, all this means is how much credit have you used versus your available credit. So if you have a credit card that has a $100 limit on it, and I spend $30 of that $100, then that means I'm at a 30% utilization rate. Now, what I personally recommend is to stay under that 10% mark so your score continues to climb. If you keep it at 30%, like a lot of people recommend, then your score won't really move. It can oftentimes drop. So I like to tell people to keep it under 10%. And this category of just utilization weighs 30% of your entire credit score. So just like the payment history, it plays a very big part in dictating what your score will be. So make sure to keep it under 10% and your score will continue to remain positive. The next category is your credit age, or your length of credit history. Now, this is weighed not as much as the other categories. It's only 15%, and it's not really too much you can do about it. It's basically the longest account versus the newest account that you have on your profile. So what they do is they take the average of all the accounts, and that's what your credit age will be. So if I have an account that's 10 years old and I just open up an account that is 1 month or 0 years old, then the average of the two numbers would make it a 5 year. So your credit report will be a 5-year-old credit report. So they take the average of the oldest accounts and the newest accounts, and whatever the average is, that's going to be the credit age of your credit report. Okay, so the next category is called the credit mix, or the diversification of your credit profile. Now, this only weighs 10%, but it's very important to have when you go looking for lenders, because they like to see that you're used to paying different kinds of debts, so you're able to pay off other types of debt. So you want to have credit cards. You want to have installment accounts. Installment accounts are accounts that you pay a fixed amount every single month. So your car payment, your house payments, student loans, those are installment accounts. And you also want to have revolving accounts, which have different balances depending on the usage that you do each month. Those are credit cards. So a credit card, you'll have a different balance every month. Those are your revolving accounts. You want to make sure you have a good mixture of revolving accounts and installment accounts. So it shows the banks and the lenders that you're used to dealing with paying these types of debts. So they have no problem, or a very little problem, giving you more types of these debts, because you've proven yourself to be worthy and able to pay off these kinds of debts. And last but not least is new credit. This is AKA hard inquiries. So banks don't like people that constantly are on the move and looking for new credit. So when you get a hard inquiry, that means that you're looking for new credit or you're shopping around for new credit. So every time you go to a bank and you apply for a credit card or you apply to get this loan, they're going to do a hard pull on your credit profile for them to assess if you're worthy enough of getting the credit. And that actually impacts your credit score and it impacts your credit profile. So hard inquiries are not good, especially when they're in close proximity to each other as far as time. So you don't want to go every single week looking for new credit. You actually don't even want to go every single month looking for new credit. Usually the better spaced out, the better your profile will be. I recommend new credit every 6 months, depending on which card it is. It just keeps the credit score healthy and it keeps your credit score growing. And this category, like I said, only makes up 10%. So it's nothing crazy, but you still want to make sure you have it managed and you understand it so you're not exploiting it and having your credit score pay as a result. So the first tip I recommend in trying to build your credit score from scratch is to get a secured credit card. Now, a secured credit card is a card that you put collateral down for. That's what makes it secured. So how it works is you go to your bank, you say, hey, I want a secure credit card. The banker will say, okay, how much do you want to put down? For example, let's just say you want to put down $200. That $200 that you put down as collateral will also serve as your credit limit. So if you want your credit limit to be $500 or $1,000, then you have to put down that same amount as collateral. Once you go to your bank and you start to get this card, you give them the money, they give you the card, they open up your account. Now you need to know how to pay it off to make sure your credit score keeps growing. And that leads me into number 2. So number 2 is finding these 2 important dates on your credit card. So the first important date is your pay date. This is the date that has been set for you to pay at least the minimum balance on this card. I cannot stress enough that I will always pay my cards off in full, and I do not recommend that you only pay the minimum balance. The reason being is the interest rates are killer. The interest rates can be upwards of 26%. And with the minimum payment, they'll ask you to only pay about 10% of whatever your balance is, but the interest is usually a lot more than that. So you'll oftentimes find yourself in a swirl of debt and you'll never be able to pay it off if you always only pay the minimum balance. So I always tell people, pay the card off in full. If you don't have it in your bank account, then don't spend it on your credit card. The next important date that you need to figure out is the statement date. Now, the statement date / reporting date is the date that the credit card company or the bank or the lender sends off whatever balance you have to the credit bureaus. This is drastically different from the pay date because the pay date just says, hey, I paid this card off, but that balance is not the balance that's going to be reported to the credit bureau. So the credit bureaus can see that you have a balance of $1,000 even though you paid on the card maybe 5 days ago. So you need to understand what the statement date is, and what I recommend people to do is to take your pay date, call the credit card company or the lender, and ask them to put the pay date 3 days in front of your statement / reporting date. So when you pay that card off on the pay date, it pins for about 2 days, and then once your statement or reporting date hits, your balance will be at 0 or whatever you paid off. If the gaps are too far apart between your pay date and your statement date, then you might accumulate a couple charges in between your pay date and statement date. So now what's actually getting reported on your credit is a higher balance than when you paid it off. So just to fix that error, I like to just put them close together so I can pay it one time, and then whatever I paid, that's the balance that's going to get reported. Step number 3 is to make sure that you keep your utilization under 10%. So no matter whatever the limit is, find out what is 10% of that limit and never let more than that report on your statement date. I'm not saying you can't use the card past that. You can max the card out. Just make sure before the reporting or the statement date that you've paid it down to less than 10%. So what's actually reporting, it'll still be positive. You're in less than 10% of that card on the utilization, and your credit score will continue to grow. So make sure you keep it under 10% and don't go over that, because that can make your credit score drop or it can make your credit score flatline. And I don't like flatline. I like to keep my credit score growing every single chance that I get. And step 4, I only recommend, if you trust and actually know this financial side of your parents, is become an authorized user. Now, all an authorized user is basically they're adding you to their credit card. Now, they don't have to physically give you a card, but all of their history, their age, and their credit limit will also get reported to your credit profile. So you'll be adding age, you'll be adding credit limits, and you'll be adding good payment history if they have a good credit card that you can be an authorized user on. This can help you build credit very fast early on, and it can help you jumpstart your credit if you're just getting into the space. And it also can help you get a boost of your credit if you're looking to go get a car. It'll help your age and it'll help how much credit you're actually used to dealing with. So authorized users are a good way to set a good foundation and also a quick way to jump your credit score in less than 30 days. And then number 5, do not apply for so much new credit. I know credit can be so exciting. You're learning how to use it. You see your credit score. You want to go get a car with the lowest interest rates, or you want to go get something with the lowest interest rates. Don't be too excited and go and shop around for all this different credit. This can drop your score because you're applying for so much new credit. You're acquiring a lot of hard inquiries, and it'll just hurt your score in the long run. Just be patient. Pay your card off the right way. Understand how credit works, and then you can shop around for a card in the near future. Like I said, I recommend every 6 months if you want to assess and get a different type of credit card for the reward benefits or something else that you just want to get. I recommend it always be 6 months apart. Do not get so excited and then just start looking for new credit and shopping around. Stick with what you have right now. Make sure you maximize the rewards and you pay it off the right way, and your credit score will jump up significantly. So those were my 5 ways to build credit from scratch. If you like this video, don't forget to like, comment, and subscribe. And I'll see you guys next time on the next video. Peace.